Joining us is Greg Tuorto, Managing Director and Portfolio Manager at Goldman Sachs Asset Management. Greg, welcome. Nice to see you.
Thanks for having me.
It does feel like the small cap trade has been heavily linked with Fed policy, easier policy, and with questions now surrounding the December cut, small caps sold off. Why do you still like them?
Yeah, I think that there's a lot of catalysts in the small cap space that are aligned with what's going on with the Fed. I do think that we'll end up in a cutting path. There's been a lack of visibility into a lot of the economic data, as we all know. But as your last guest also said, there's some worries on the job market that seem to outweigh some of the inflationary pressures that are out there. So I do think that we will be lower eventually, maybe just not at the next meeting.
So, but do we need Fed cuts for small caps to work?
We have not had a linear path for Fed cuts for the past 3 years. We were waiting for them to raise the federal funds rate, then we were waiting for it to come down. So I do think that a lot of the small cap companies actually have tried to make their own weather in a lot of ways, and I think that you've seen kind of a really good earnings path, especially coming out of the third quarter, that's made them much more attractive than large caps.
That's the pitch? I mean, I just wonder. I imagine you on the road marketing your fund. You're a small cap manager. We all know what's happened to the group for so long. So what are the key things you lead with to say, hey, you want to put your money with me?
I do think that the animal spirits trade is live. I do think we've seen a significant uptick in M&A, and it's a lot more strategic M&A than what you've seen the private equity guys coming in and sort of kind of taking these things private. Strategics usually come with higher prices, which is usually something that that's quite attractive for the small cap space. Biotech's been quite active. That also kind of has a flywheel that leads into the IPO market. As that IPO market recovers, I do think that you're going to see a little bit more on the smaller IPOs than the larger ones.
You do? Why do you think that, actually?
Because I think the larger ones are struggling with the fact that, we heard about OpenAI and the $1 trillion valuation. I mean, think about it as an equity capital markets team trying to price that. It's probably a lot easier to try to price a $4 billion software company or a $5 billion biotech company. So I do think you're going to see a few more of those come as the SEC reopens and you start to see a more normal path of the IPO market. And valuations in there should help the overall market go up.
Yeah, I mean, there was a time when most IPOs were, relatively speaking, smaller cap. Obviously that changed, and then you had the opportunity to participate in the growth of those companies, which is different than it is in the last 10 years.
It has been, and I do think that there's I think that we're going to see a number of companies that are going to be below a lot of people's radar screens. Software may not be the place that it all happens, but semiconductors could be. And I think you've seen some interesting semiconductor companies that are part of this AI build out, that are on the edge of some of this networking infrastructure that we need. That'll be exciting. I do think that you have seen some stuff in the defense and aerospace. You'll see more of that. I think that market is broadening out. We've heard about what's going on in Europe. There's a remaking of what's happening in the United States in terms of defense budgets. And I think that those kind of areas could capture people's attention and bring them back into the market.
So you've mentioned tech, you mentioned biotech, you've mentioned defense. Do you think it gets so broad as to include some consumer-facing names?
Yeah, it's been harder on the consumer side. I do think that some of the companies that have really, kind of come out with very, very aggressive opening plans have not been rewarded. So I do think that you're going to need some more concept-based stuff. That's a little bit more, kind of bottoms up, as opposed to sort of like growing with the economy. So not as excited about some of the consumer concepts right now because it doesn't seem like they've been able to catch fire.
Right, and you could extend that to packaged goods or restaurants or anything else, right?
I think the restaurant space has kind of struggled with a lack of traffic, and I do think that as we've kind of come through kind of the summer and into this government shutdown, it has not broadened for them. I do think that most of them are trying to maintain pricing where it is and trying to offer value to their customers, but it doesn't seem to have kind of resounded with people coming in the door.
But can the small caps be as big as beneficiaries as the big companies on AI?
I think at the company level, yes. I mean, we've seen a couple of the companies we own that have been that sort of, we use AI, we are AI. A company we own, RadNet, on the imaging side. They're utilizing artificial intelligence to help radiologists read things faster. And if you can do that and you can read more of these things, that's a really important aspect. DigitalOcean, a small cap software company that we own, is really focusing on small companies and bringing AI to small companies. If you think about a big company like the one that I work for, we could spend a lot of money on AI and give it to everybody on their desktop. That costs money. I think if you're doing that in a small company with 100 people or 200 people and you want to make them look bigger, you have to actually do that in a more effective way and actually teach people how to use it so utilization rates go up.
Yeah, because they can't spend as much.
No, they cannot.
I was wondering, so many of these companies aren't covered anymore by analysts. I just wonder from a research perspective how you get, I don't know, what your team's like, how you actually go about doing the work.
Well, we have a good team. We have a large team, and I think that's one of the things that sets us apart. And I think the interesting thing has been that we meet with a lot of companies, and not all of them are the ones we own today. And I think that we try to build that sort of backlog of ideas, that front burner list that allows us to kind of have new ideas at the ready, which don't come from the IPO calendar, which it may have been 5, 10, 15 years ago. And I think that's important. I think also the way that we do things has changed. We don't have to get on the road for 6 days and kind of visit 20, 25 companies. We can do 3 Zooms. We can do 5 Zooms. We can actually focus in on things that actually make us a little bit more productive and get to know these companies at a more intimate level.
I'm looking at some of the top 10 holdings. They're not Piper Sandler. Okay, we know Standex International, Halozyme, MYR Group. Is there a theme here?
MIR is an interesting one just because it's if we hear again about the fact that we need not just more energy, we need more transmission equipment. We need to get energy from some of these places where there is either wind or solar or excess capacity into other places where there isn't excess capacity. And it was an election year issue, especially in the state of New Jersey. Electricity prices are up. We have transmission issues that are part of the grid. MYR helps that out. Big backlog, and I think that's a company that is. I wouldn't want to directly say it's an AI trade, but I do think that part of the energy trade is the AI trade. And Piper Sandler, on both the equity and debt capital market side of things, has been doing quite well for a mid-sized company. And we do think that that's an area that Piper is continuing to gain share as some other people have stepped back.
MYR's had a 55% rise in the last year. I guess that explains it if it's tied to AI. Thank you for joining us, Greg.
Thank you for having me.
Talk to the strategy. Greg Tuorto from